Hello everyone, Jose Ricaurte Jaen, War Room. Today I want to share with you this idea of different companies. As usual, on a daily basis we have great content, quality content, ideas that you can take. We're not your financial advisors. We know that. We, both of us, you and me, we know that. Mahesh as well from India, our data scientist, he's not your financial advisor. However, we're facing challenging times. So our team, our colleagues at Marketers Daily, we truly think it's the time for everyone to embrace online trading, online investing. There's no reason for you not to have your trading account. And today I want to talk about a company that has tremendous share market and projection in China and Asia. We have JD.com, ticker symbol JD. And I will talk about a little bit about just a little bit about the company, so you have an idea what is this company about, and then we'll go and work based on price rotation. My signature strategy, strategy tactic that I use to follow companies, know exactly when to buy, when to sell. Give me a map, a wide range of selling and buying levels. All right. Hey, let's do it. Okay. Now, this is the website. You can find it ir.jd.com. You can see a little bit of what they do. And what I wanted to share is exactly what is JD.com. You probably never heard of it, but this is absolutely a powerhouse in China. What they do is that they're very similar to WeChat, which is their application. Remember, in China, they don't have, as we do, they don't have Facebook, they don't have Instagram. They have a one inclusive communication tool, which is called WeChat. And what JD reminds me, it's a similar thing as Amazon, and at the same time is where a lot of retailers can connect and sell their products to the Chinese. So huge potential for those of you that want to have a little bit of piece of the action from this company. Now, China absolutely is a mature market. There's a contraction expected. Probably the GDP will go all the way down to 2%. You just write it down. 2% is going down from a 6% all the way down. Now, pay attention, because by 2021, they are expecting a growth all the way to 12%. I think it was ING, the Dutch bank, ING, that is expecting this change in the GDP growth by 2021. Why not? Could be all the way to 2022. So 2020 will be absolutely a difficult year for several economies, not only for China, the US, the German, the French economy. We're all in this together, and it's true. We're all facing massive challenges, massive economic adjustments. But together, if we sort of find the right opportunities, the right frame of work, moving from this year, from 2020, which is the beginning of a new decade, we will all come better and improve our lives. Now, that also comes with the idea that you have to be on top of all these companies, not on top of all of them, but find niche markets that are suitable to your risk profile. In this case, I always recommend to my clients, hey guys, you need to have exposure to different markets. When I look at international markets, then JD.com, ticker symbol JD, is my bet. Here we go. Now, we know what is the company about. Let me just remove the pencil. Let's continue. And there's one fundamental factor that shifted the company all the way during the 2 weeks in March when the S&P, the rest of equity indexes were in selling mode. Now, on March 17, JD announced a $2 billion share repurchase program. Ladies and gentlemen, what this means is that they're going to remove from the market $2 billion worth of shares. Keep in mind, in the US, repurchase programs were one of the reasons the stock market as well was going up. It wasn't the only reason. It was one of the many reasons. So I want you to picture that that's exactly what JDcom is doing. So there's a fundamental support coming from the board of directors. And in the medium and long term, it does have a little bit of value for investors because you don't get diluted. There are less shares in the market, and that translates into relatively higher stock prices. Okay? Now, we have that information. At the same time, before I jump to TradingView and start working with all the values I'm looking at, price rotation, just one thing I wanted to share. Let's take a look at this. Now, there's a ton of sites, tons of free sites, and there's one site that I wanted to share with you guys today at the same time is FinViz. They don't pay me. Sorry. Excuse me, guys. A little bit of allergy. There's tons of websites. It's investing.com. You can come to our blog where we have a lot of quality information. But however, when you look at websites that they have a lot of value, a lot of small tools that are very visual, I truly advise you guys to take a look at FinViz. FinViz is one of the many free tools that during our coaching I explain how to use to our trainees, clients in general. I'm not going to take much of my time today. We'll have another video, if not today, tomorrow on Sunday. I will make an exception because I think it's a very good tool, and it has a lot of value on the free version, on the freemium version. All right, now one of the many things that a lot of professionals use is the map, the heat map. You see everything that is looking, and I have a 3-month S&P 500 heat map. Take a look at this because it's divided by sectors: technology, services, basic materials, consumer goods. You have industrial goods, healthcare, financial. I think, yeah, that's how it is. Now, if I were you, all right, if I were you, I would be right now using FinViz. Sign up, it's free, all right? I don't get any benefit. But this is good for you just because it gives you an idea to take a look. If I am looking to buy a company during the last 3 months, the first one that is popping in my face is Amazon. I have talked so many times about Amazon and everything you can do with it. But then there are others. Look at the other ones that you have that are also in green. You have healthcare, the drug manufacturer, Eli Lilly company. Over there, we have Gilead's company at healthcare as well. Gilead Science is apparently coming up with a solution next week. Which one is this? Newmont Corporation Basic Materials Gold. It's plus 37% in the last 3 months. Look at that. Utilities, we have WEC Energy Group plus 6.77%. What else we have? We have Excel Energy plus 5.96%. That's pretty much what we have. Over down there we have 8%. The utilities, Eversource Energy. Okay, AMT on the side of financials. That's American Tower Corporation. That's a REIT, real estate. It's up plus 14%. DLR, Digital Realty Trust as well, plus 24% in the last 3 months. Two more. Market Access Holding, it's plus 8%. And the Progressive Corporation, plus 8.72% in the last 3 months. That's in the financial sector. So do yourself a favor. We always want the best for you. We truly publish in your best interest. Get a free account. Start using FinViz financial visualization, and you have all this on your fingertips. How easy it is for you to determine where to allocate based on sectors your funds. Okay? Now, I'm going to jump directly and let's close this video with JD analysis. First off, I'm looking always at volume profile. Remember, TradingView.com is one of the best charting tools out there. If you get a pro package, premium package, you will have access to volume profile and the different tools. Take your time to play with it, learning, use it. Huge potential for your trading, to improve your trading understand when to exit a company, when also what to wait, where will be your best buying area. Now, if I look at this, situations that I have to consider: support, the red dot line, horizontal line, that's your point of control, your balance. Point of control, POZ. Right now, that's at $30.89. If you want to be conservative and take a long in this position, you're looking at least a 25% risk based from the current price all the way to point of control. I'm looking as a guidance, I'm working with the weekly chart. Take a look at that. That's what I will do if I were to be conservative and decide to buy today. Now, there's a lot of this thinking, well, everyone is expecting the market to make a new low. Well, that's great. It doesn't have to happen. There's a lot of free money. Free money means, I talk to Mahesh about this all the time, free money coming from central banks all the time, CBs, central banks. They're flooding the market with free money, and investors have nowhere to go to equities. Equities, it's the only place to hide your money. Just sort of say to allocate your money. Because at this time, interest rates are way below 1%. It's impossible, almost non-existent, for you to make money if you don't allocate your money in the stock market. Bonds are going to get decimated. Space dust. You don't believe it? Start studying a little bit of what happens with bonds from this point. Many of these, for example, the RBA, Reserve Bank of Australia, they already said interest rates are going to stay lower for the foreseeable future. For a long time. No one is going to talk about that, of hiking rates. You need to have a return on your money. Stocks are the way to go, the place to be. We can always argue the debate about gold. Gold requires storage. It costs you money. You need dividends. There are multiple papers, studies explaining the power of dividends. And that's how pension funds work. They need dividends. Gold does not provide that. Yeah, but gold is a hedge. There's no inflation. No inflation. The OPEC, Russia, Saudi Arabia, they're fighting to survive, trying to balance oil. Too much production, little demand. It doesn't work. The only place to be, simple, whether you like it or not, stocks. Now, you need to know also which stocks, what's the direction, where's the market moving. Industries, that's crucial for your survival. All right, now let's continue. So that is the conservative view. What is happening with stock? Now, there's something I use all the time. It's called price rotation, and I came up with the idea after talking to Ross Givens. He used to work for JP Morgan for a couple of years, deliver a lot of research to hedge funds, charging $10,000 for his idea. And he talked to me for a couple sessions. I'm very thankful that he did that. So I was putting the puzzle together, and when I finished solving it, I was like, look, there's strict levels that you will always see on the chart, and it's the institutional, the big money, the smart boys setting the way for you to understand. And this is what is price rotation. Very simple. Price rotations to the sell and to the buy points are liquidity levels, what we call liquidity windows. It's not a resistance, it's not a support. That's the way it looks. But what really happened behind it, the real mechanism is, at this point, the big boys, and there are different concepts that I can share with you, develop tactics from these levels. There's the market cycle I use, and so many others. Now, this is a rotation. The price of JDcom, ticker symbol JD, has been rotating between 2016 all the way to this point, from the lower band rotation, $18 to $20, all the way to its highest, somewhere around $45 to $50. That's price rotation. This is what the stock has been doing for the last 4 years. It has been rotating between 4 values. 4 values to the downside, 4 values to the upside. That's it. It's quite simple. A third grade will understand this. It's quite simple. You can call it channel, whatever. At the end of the day, it's price rotation. The price itself, the price of the asset, has been rotating within certain values defined by institutionals. The institutionals are the ones to control the entries and the exits. Those are liquidity windows. Now, understanding this concept, it's easy for you to trade. Why? Because now you have a map. I have a map, and I had this map from JD for the last 4 years. This is not new to me and should not be new to you. With this information, now you understood that moving to the next liquidity window, you had an opportunity to buy at $20. If you were to take this trade back on December 2018, on one of the latest strong pullbacks, you have about $116 with a company that is very solid and is very structured in e-commerce. Companies that do not have a strong e-commerce online presence, they're doomed to fail. That's why all the Macy's, all the brick and mortar companies, they're just going down. TGT, for example, Target, has been saved by the bell because in the last 2 years they've been working so hard, smart, to have their e-commerce footprint, and that's why they're still around. So if you don't do it, you are gone. That's just the way it is. Please understand this. E-commerce, you needed to have it. So JD, you're talking about probably the most comprehensive company around selling your goods in China, your one-stop shop, and is an e-commerce powerhouse. So at that time, all the way from December 2018, you're buying when it's blood in the water. There's blood on the streets. You're buying it, and you had at the time, at this point, like in January, February this year, you had about 116%. 116% is not a bad return in about a year and 6 months, give and take, a year and 3 months. Now, there's another situation. We have the saga of the coronavirus pandemic. Just to finish this video, to give you an idea, you have this value. There we go. And we have the return all the way to the trend. If I take this, the trend is still in place. You can't deny it. It's in your face, guys. In your face. Look at it. It's in your face. The trend's still up for this stock. So what is going to happen? We understand. I have a 22% if I want to be conservative. If not, simply because of the market condition, I will take as high as a 50% haircut if needed to take this stock. And based on price rotation, we're targeting short term. My first target would be 15%, but that's bad business. My risk reward is not acceptable at this time. If the repurchase program is working, plus understanding price rotation, have $28 at this time. Continuation, once we break to the upside, will take JD to a new level, to a new rotation, and that will see the price based on all the evidence from the fundamentals, based also on the technicals, with volume profile to your right and price rotation. There you go. Here we go. It will take you to this stock will be at least worth $78. Total gain from current levels estimated about 83%. Still not a 2-to-1. It can be adjusted. There's a lot of risk management, money management techniques that we use and explain to our clients. Absolutely, we can take it to 2-to-1. This is just a quick overview of this company, JD.com, JD. Once again, guys, I thank you for watching. Take your notes. If you have any questions, I will leave my email in the description. Please reach out to us. Also, look at the description of the video. We have the link so you can access the war room and take all the information that I give, trade ideas, also trade ideas for speculators if you want to go and trade call options, also put options. Okay? So, sorry guys, excuse me. So, this is a company, as I said, massive exposure, China. You want to play the Chinese market. This year, they may go down to 2%, maybe lower. But in 2021, expect a great rebound on the Chinese market that can take their GDP plus 12%. That 12% comes with a lot of infrastructure and a lot of consumption. That means that those that are playing e-commerce in China, that are selling their goods in the Chinese markets, they are in their position to make a killing. Your goal is to take advantage of the upside potential that will be translated into higher prices for this company. Ticker symbol JD.